Hi, it's Adam Hewison. I'm coming to you from the digital studios of MarketClub, as always, and we're looking at crude oil. This is the first time we've looked at crude oil since I got back from down under in Australia and New Zealand, and it's kind of an interesting pattern which I noticed and I wanted to share with you. And this is what we're going to be looking at today. So crude oil, symbol is CL.H10.E. It's the electronic version. The pattern I saw is pretty simple. I'm going to draw this out quickly for you. This is a low here, this is a low here, and this period was 10 weeks, okay, from here to here. So this is a weekly chart, as you can see right here, and we're doing this on the weekly chart ended on the 31st of January, the end of the month. So it's right up to date, and we are going to be looking at the next low, if you go project that forward to here, and that takes us into 13 weeks. I think pretty soon you get an idea of where we're going with this. So the next low, if we go over to here, is 11 weeks, and then project that further forward to here, and that's 13 weeks. Now we're into, so far, 1, 2, 3, 4, 5, 6, 7, 8 weeks. So if we look at the average here is 11.5 weeks. That's low to low, or cycle trough to cycle trough. So we're looking at a period where we could be getting very close within maybe 2-3 weeks of a major low in the crude oil market. So let's just take that off the screen. So let's look at this again very quickly. First low was, we're going back to February of last year, and as you can see, the market had a move up, came back down, created the low, 10 weeks. Move up, came back down, created the low, 13 weeks. Went up, down, 11 weeks. Up, down, 13 weeks. And finally, where we are right now, we've gone up, we've come down, and we're into week 8. Now, cycles can contract, so they can get smaller, which is the case, let's say, here, or they can expand, which is the case here. So we've taken the average of those numbers, those 4 or 5 numbers we've gotten here, and come out with. So there we have a weekly here, and another weekly here for the trend, and then the dailies you can see coming in here. So this is the idea. You buy here because the weekly trend is up, 79.36. You'd sell here at 82.40, so a nice little profit there. And you'd be out of the market because the trend was going down. You would get back in the market at 78.09, and the market's currently trading around 74.15 as we're doing this live. Our trade triangles are negative on this market, as is the cycle. So it would look as though we're going to see this market go lower in the near term, even though it's rallied today. So our score is 60, which is really like a trading range with no clearly defined trend either up or down. Now, if we were to change this and go to, let's say, 70 or 75% down, it would mean that a trend is definitely developing. So the MACD, which is down here on the daily, is still negative right here, still below the red line, and these numbers are still below. Even though they're going up a little bit, they're still going below the line. So all in all, it looks as though we may be a week or two away from a cycle low. Our trade triangles are on the money, in the profits. We are going to be protecting this position very closely with stops. So again, be disciplined, watch these markets, there's lots of opportunities. Crude oil is becoming very interesting again, so let's see how it works out. This is Adam Hewison from MarketClub. Hey, thanks for stopping by. Every success